Happy weekend to anyone listening. Now, I want to show you some charts, what I'm looking at. These volume profiles I have been observing, and they act as a support and resistance. And Bitcoin has found daily support above the value area high. It's acted as a resistance in the past, and it has closed above in the past and pushed higher. People are getting awful bullish at the moment, given that the daily uptrend is intact. Clarity Act is only 61% chance of passing. It doesn't pass by November 3rd. Midterms, Donald Trump will lose the House, which is normal for a president after 2 years, to act as a check and balance. So the opposition has more say in the legislation being passed. This is a beautiful part of American democracy where they flip between both sides. And if they do go too far in one direction, they can change course. And that's essentially what the vote for Donald Trump is, a massive change of course and a shake-up of the jar. But in the Australian context, which is where I'm from, the left, the Labor Greens have given us penalty rates, free healthcare, social benefits. And the right wing have given us strong companies, etc. So it is good to have both philosophies uh, negotiating and having a turn in power. And the best part is we can change course and remove the leader. So all the other coins are basically um, leverage on Bitcoin. So they go up a lot faster than Bitcoin when Bitcoin is powering up, and they go down a lot faster as well. The best way to trade is with the trend. If you keep trying to go against the trend, you're likely not to be profitable because trend continuation is probable, and it's where the momentum is. So the higher the time frame trend, the stronger it is. A 30-minute time frame trend is not strong at all. This is a 1 hour, a 4 hour. So we have a high taking out the previous lower high. Then we have a higher low, a high, a higher low, and another higher high. So I've got the change of character here at the previous higher low. So if price comes down and starts to close candles below, the traders, the market, will then signal see that as a signal that the trend is weakening, and because it's on a 4 hour, that's quite significant. And if it tries to go back up to breach the previous higher high, it's likely that the sell pressure is just going to drive it lower and make a lower high, and that's when the downtrend is confirmed on this time frame, because it would have taken out the higher low and made a lower high. So the first foundation of trading is learning how to read the trend, because trend continuation is probable. Trend reversal is not as probable. So just master trend continuation first. In this scenario, I have taken a trade here, and it is a bit premature because it hasn't changed structure yet. I am essentially going for a trend reversal, and even on the daily, it is showing an uptrend. But based on other indicators and resistance levels, I'm saying here is a good risk profile, because even if it takes out my stop loss here, I'll just wait for it to potentially sweep this area. And so if I lost both in a row, I'll probably sit back and go, okay, maybe it's going to go higher. And the ultimate short for me is 80K, about 83K range. This here, I have some alarms set for that. This here, in my view, people are just going to be selling, taking shorts more than people are going to buy. And yes, this is probable up to here. This here is so back testing. When prices in a daily downtrend, which can be observed here from the lower highs to the lower lows, daily downtrend, it's likely that the trend is going to continue. And in this regard, the Fibonacci 0.618 has just been a great area to take a risk profile to the downside. This was a clean trend. Now it's starting to curve a bit. And we can look at things like RSI or volume. So RSI, relative strength. So we can see that, when it made a low there, the second low wasn't as deep. There was it double topped on the RSI, but on the price it went higher. But this could indicate a lower probability trade. But when it was hammering down here, these were good trades. But when you're trading, you should not risk more or too much on one particular trade. You need to be able to get like 100 trades under your belt and see how you go with your strategy over 100 trades. That's how you spread the risk over a large data sample and give yourself more time to find better setups and also make mistakes and still be able to recover from those mistakes. So that's why professional traders say 1% of your account. And it might seem boring risking $1 or $10 on each trade. But when you're starting out, you want to see it work. And you're better off seeing it work than quitting and losing and getting disheartened with the whole thing. Because if you can prove that it works over 100 trades at $10 per trade, then you might be able to risk a lot more.